Welcome back to the show. I'm your host, Mr. B. In this segment of the show, we are going to discuss the housing market. There's been some shifts, there's been some changes in light of the shifting things happening with the war and other inflationary pressures. It's changing the housing market. Apparently, there are more sellers than there are buyers. That means there's more inventory than there are people willing to get it, which ultimately should mean that there should be a huge price drop in the market so that it can properly regulate itself. Let's jump with Patrick Bet-David so he can tell us more about the statistics.
Get to is more sellers than buyers. Let's talk about real estate. So here's a story that came out about there's more sellers selling homes than buyers. And this is a scary thought. So home sellers outnumbers buyers by 630,000 in a record gap, according to Redfin. Rob, if you want to pull this up, I think it's on page 20. I don't think you have a video on this or anything. So let me kind of go through the stats, and then I'm going to come to you guys with this. So the U.S. housing market has shifted decisively in favor of buyers with a record 630,000 more home sellers than buyers in February. The imbalance of 46.3% more sellers than buyers marks the widest gap since the company began tracking it in 2013, up sharply from 29.8% a year earlier. Redfin classifies any market with more than 10% excess sellers as a buyer's market, or threshold the nation has exceeded since May of 2024. We're seeing a lot more inventory on the market compared to the last 2 years because the mortgage rates lock-in effect is easing, and there is a lot of new construction, says Justin Gomez from Redfin Premier Real Estate Agent in Omaha, Nebraska. 2 years ago, people were offering $15,000 over the asking price, just got a home, with multiple offers everywhere. The surplus of sellers gives buyers who can afford today's price significant negotiating power. Housing costs, the high housing costs and economic uncertainty have pushed many would-be purchasers to the sidelines, shrinking the buyer pool. The number of home buyers fell 2.4% in February. So, Tom, when you're looking at numbers like this, and it says the imbalance in different markets, meaning Miami led the nation with 163% more sellers than buyers, followed by Nashville, 120% more sellers than buyers. Austin at 112, Palm Beach at 110, San Antonio at 104. What do you think is causing this? Is it just interest rates?
No. It's interest rates and savings. Right now, the savings rate used to be 8-9%. Personal savings rate has gone down under 5% right now. So people are saving less on a monthly basis, which means you're saving less for a down payment, number one. And number two, when I saw the number on a national basis, I believe homeowners insurance on a national basis, and Rob, fact check me on this. I'm going to say a number here, but we need to find it. I thought it was 22% increase in homeowners insurance on a national basis since 2022. So 4 years, your homeowners insurance comes up. Well, wait a minute. That's a hidden cost of buying a house. Now the homeowners insurance is more, and Rose and average, there it is, 21%. That was just that year alone. So it's huge. That's a hidden cost. So the interest rate affects your payment, Pat, but then your homeowner's insurance is also up, and the overall cost of the house was up, so that the number of homes that are available for your first-time buyers and mid-tier buyers is actually even lower and worse than this chart. Because to find a mid-tier home in Core City, you can't. And if you take a look what's being sold in Miami, where there's more sellers than buyers, go take a look at what's actually being sold. Look at the number of $1 million condos. Kid coming out of 30-year-old kid just gets married. He and his wife have a college degree and good jobs. They can't buy $1 million condo in Miami and pay the HOA, which will be $1,000 a month or more. So there's a lot of things going into it. It's not just the interest rates, Pat. It's the replacement cost of the house driving the homeowner's insurance, and then it's the property tax because it's a higher priced home in the first place. Because if you look back at those lines, Rob, go back, scroll back down, when red's over blue, prices are going up. When blue's
You're overpaying for everything.
And so what happened in 2021 to 2023? We were coming out of COVID. We can come out to play. And those lines drove the price of the homes way up. And those prices have not come down. They've come down a little bit, like Austin, Texas, it came down. But Austin, Texas had emergency building permits and they overbuilt. Go take a look at the inventory in Austin. Rents are now moderated and the number.
Websites your competitors don't want you to know, part 2.
All you do is go to this website and it lets you find out exactly how much your competitors are making.
Solution. Brad, you build homes. What could I do? I need permits faster and I need labor. Okay, we'll help you with the permits faster. So Brad works for Lanier, gets another 1,000 homes built around affordable areas of Austin. Now that's inventory, supply. All of a sudden the prices moderate a little bit and everybody can find a home. Now we just need jobs. Oh, SpaceX. Elon puts things here. Dell expands. Austin has got its issues, but it's an example of where things moderate back and forth, Pat. And people can say in the comments, I'm in Austin. It's not what you say. It's better. It's better than other places. So if you're in Austin and you're still having a tough time, God bless you. I understand. But when you compare what you're facing to other areas, Austin's getting supply back in the market.
Brandon, thoughts?
Yeah, so I sent you a chart, Rob. It's and it's interesting this chart doesn't go back to 2008 because I wonder what the gap would have looked like then. But part of that problem was the bond side of it, where people couldn't pay for the mortgages. But
it was artificial supply of buyers drove price because they were able to get Nina loans.
Right.
So you had more buyers because you were giving easy qualification.
Mm-hmm. And then a ton of houses just hit the market suddenly when they had to foreclose on them. But yeah, this makes me wonder if prices will ever substantially go down again without a crisis. I mean, because they're covering it as if like there's this huge gap between sellers and buyers, but it's not even making a dent in the price. But like what did make a dent in the price was dropping rates to zero and injecting a couple $1 trillion in the economy. I mean, like if you look at this, it went from 370 on average to about 516 in just 5 years. So, I mean, that's
and hasn't come down.
Yeah, it's not coming down at all. And like this is like if it's not now, when is it going to be?
So here's the thing: is this story making you, if you're recommending Bradley to a young man who has money to buy, should you buy or should you wait?
Say that once again.
If you're a young man, you're 30 years old, and you have some money to buy a house, okay, you can buy $500,000 house today. Should you buy or should you wait?
Hard question. I would personally tell him to wait, only because I do believe those prices have to be coming down. Because again, if there's so many sellers, the price is supposed to drop, but they're not. So why is that? Well, then I would just wait for that purpose. But it's also less desirable to own nowadays. The younger people, they understand freedom. They understand, anchors. And a home is an anchor, There's more sellers than buyers, right? Everybody wants to sell their home. What for? Well, what are they going to buy when they do? And if there's not enough buyers to sell your home, you're stuck, aren't you?
And you had a low rate. So do you want to give up the low interest rate? Do you want to give that up? Who knows? And you got to keep going. And you know what the and is the following: is where are people moving to today? Red or blue states?
Red.
And have we seen these numbers? What it looks like? It's astronomical that they're moving to red states over blue states. You think that's going to slow down anytime soon?
No.
So if it's not going to, and by the way, what types of people are moving to red states? Those that just want government entitlement programs, or those that are coming with income and money and can afford to
with
overpay?
capital that's getting taxed and chased.
So like read those cities again. Those are all
Miami, certain markets so then the Palm Beach. So then your question becomes the following: do you want to compete against the guys that are coming here from New York, Illinois, DC, all these places? Do you want to? Because they're coming here saying, "Wait, I'm going to buy property in New York. I would pay this much. In Fort Lauderdale, I'm going to pay this much. I'll pay 30 grand more. I'll pay 20 grand more. I'll pay 40 grand more. I'll pay 80 grand more."
Yeah,
because it's still less than what they're accustomed to.
No, this has changed. So I was from the mindset of like last year, like, oh, it's too expensive right now. It should come down like 10% at least. But now seeing this, like, because Miami's one of the worst cases of there being a gap between sellers and buyers. So now I'm like, all right, fine, I'm going to do it now if it's still not coming down.
But the part of it where you're screwed is the following: you're in the state that everybody wants to move to.
Right.
You're in that state.
So it's like, get in now if it's not going down yet.
Yeah, this is not a state where, so what is the likelihood, Tom, that the next governor of Florida is going to be a Republican? What's the likelihood?
I think
is it at 55%, 60%?
60.
No. I'm at 80, 85%.
So Byron Donalds is going to be the next governor to state of Florida.
Yeah, not getting support from DeSantis. Another topic for another day, but Byron's got a head of steam and a lot of money.
So if you got a guy like that, that's next. So that means this state stays blue for another I'm sorry, stays red for another 2 terms,
Mhm.
this is not going to slow down.
Yeah.
They're going to keep coming. And in the interim, let's look at Mamdani, what Mamdani is doing in New York. You want to see this one here, folks? This is entertaining to say the least. Okay, so let me read this to you. Let me find a page. Here we are. Watch this here. Very, very interesting on what's going on with this. Okay, so Mamdani comes out and says, guess what? We've officially balanced the budget. And all the socialists are like, dude, the guy is crushing it. What a freaking rock star. And then behind, is this the video talking about he balanced the budget?
Yep.
Go ahead, Rob.
New York, it's executive budget season. And I'm proud to announce that our city's budget is fully balanced. This budget isn't just about numbers on a page. It determines if our libraries get funded, if a street is safe to cross, if snow is actually shoveled after a storm. And you deserve to know exactly how we got here. We inherited a $12 billion budget deficit.
We are speaking about a fiscal crisis at the scale greater than the Great Recession. Was the Great Recession?
Great recession. Many said the only way out of this was slashing services and passing an austerity budget. We rejected that. After months of painstaking work, that deficit is now zero. Our city is now on firm financial ground. We achieved this in 2 major ways: increasing revenue and support from Albany, and cutting waste and finding savings here in New York City. Thanks to Governor Hochul, State Senate Majority Leader Andrea Stewart-Cousins, Assembly Speaker Carl Hastie, and months of organizing from New Yorkers, we tax the rich. That tax alone will raise $500 million per year. And that's not all. Thanks to Governor Hochul and our partners in Albany, we finally got a better deal for New York City. We're getting billions more from the state to help tackle the gap.
You can pause it right there. You know how much they got? They got $4 billion. So, Tom.
Per year.
Per year. So, Tom, yeah, $8 billion last 2 years. So when people are looking at this, they're like, okay, you know, how good of a spin job can you do to sell it as if everything is going right? What is he not telling in these clips, Tom?
Well, he's not telling you how. He's saying we got help from Kathy Hochul, and we think it's important to shovel snow. It's a no. I want to see him go to the board and say, this is how we balanced it. Because number one, he had a surplus from Eric Adams, who you know, Pat, and has spoken to us. So we're not out of school here. We had direct conversation with Eric Adams. We know about the surplus that was brought in. Then he gets money from Albany. Guess what? That's not balancing the budget. That's Brad and my daughter our daughters call us from college, and she's spending $500 more a month. I agree to give her $400 more a month. Brad gives his daughter $400 more a month, and then she meets a nicer guy, and he starts paying for dinner. They didn't balance the budget. They just moved things around, and other people helped. That's what's going on. And then this guy here, I quoted this study, and then this guy comes to the microphone 2 days later about education in New York is not getting any results. So he didn't tell people how and what he did. He leaves out the fact that supposedly, what was the gap from Eric Adams? The exact number, 3.6. Rob, tell me what that gap was. Because if he gets $12 billion, and he claims
it was 469. I don't know why I think 36 could have been.
That's what I'm saying. Please fact check me what I'm remembering. What Eric Adams left him. Eric Adams left him $5 billion.
Yeah, I thought it was 469.
Okay.
Yeah.
So 5 and 4 from the state is 9, which means what did he cut and what did he change? And then he got $500 million from. So let's do it. 5 and 4 is 9. $500 million from the millionaire tax is 9.5. And so 12 billion deficit, he only had to find 2.5 billion. What sleight of hand did he do with pensions? I want to know. What did he do with certain services? He's quoting that we have all these services. Where's the rest of it? I want to see it because it shows that they actually did nothing. What percent is 9.5 on 12?
He says he taxed the rich.
Yeah.
What'd you say?
9.5 on 12 is what percent?
75%.
75% came from somebody else.
Yeah.
He didn't do it. So
just you, building your app on base 44.
Brandon.
With all that aside, I'm most mad about how long it must have taken him to do that video because I mean, like he has different cuts and everything. I mean, how do you think it took him a couple hours to do it? Because he's firing these off like every day, like a fully edited TikTok.
For sure, it took him a couple hours.
Yeah. So I mean, like that pisses me off.
It's a great video.
It is, and he's doing all the cuts the right way where it'll do well on TikTok. So yeah, he is good. He's even better than Newsom with the spin job. But I mean, all the states, like they run the states the same way that the United States runs the country. You know, like they spend money on things they shouldn't spend it on, like the migrant situation. They have to do police overtime because there's so much crime, so they have to spend extra money on that. The healthcare situation, like that's more expensive than it should be. So I mean, think about how much money New York generates. Like just the city alone generates like 60% of the state's entire GDP. So I mean, just the fact that they don't have enough money for what they need to do shows that they're not managing it the right way. And I mean, should have certain requirements to run a state.
So this the part when I sit there and I think about, by the way, did he do the free buses? Did he do some of these programs that he talked about?
I haven't heard.
Nobody
No,
knows,
no.
right? It's been kind of quiet on some of the programs that he was talking about. But if you want to go back to that clip, Rob, of that right there to the left, right there, watch what the cost is right now per kid that goes to school. If New York State just decided to give the money, of New York City, if they just decided to give the money to the parents, you know how much money would go back to the parents? This is how much education costs in New York right now. Go ahead, Rob.
New York City
Watch
spends
this.
roughly $37 billion a year to educate about 850,000 kids. That's over $42,000 per child per year. And the results are abysmal. 2/3 of fourth graders can't do math properly, and almost 3/4 can't read at grade level. You don't have to be an expert in fractions to know that is bad. Let's agree that the political reality is we cannot reduce the amount of public education spending at all. Fine. What can we do, Mr. Mayor, is tell every mom in New York City that the $42,000 currently spent on that terrible education is going to be her money. Here comes some more advanced mathematics, some more long division. We are going to give her half, 21,000. That's 42,000 divided by 2. Every year she will receive that as a voucher for her child to attend whatever school she wants. We are going to take the other 21,000, put it in a real account, not a fictional Social Security account, for which her child is the sole beneficiary. If it returns a paltry 2% over the next 13 years, that child will graduate high school with $300,000, enough for college, trade school, or a down payment.
You can pause it right there. So money going to the family instead of the money going to the government. Where would you rather go?
Family.
Think about that. So he's asking a very honest question, $42K a year per child per year. Why not just give it to the parents and let them decide what private school they want to put them into? Why not change it? I think he continues to go into vouchers and different structure on how to do it. That was his solution. Tom, I think you were about to say something.
I just found it in plain sight, right? I agree with this.
He delayed the pension plan. Did you see that? He delayed it for 2 years.
$2 billion. So in other words, Eric Adams 5, Albany 4, 9, wealth tax a half, 9.5, $2 billion on the pensions, delays funding. That's $11.5 billion.
Did you understand what I mean by the pension? He delayed the pension for 5 years or 3 years to be able to say, hey, we don't have to put this now. But you know why I love this? Let me tell you why I love this. 2 things. One, you're screwed if you don't buy a house now. Because they're leaving.
Right.
Okay, so the young guys that are sitting there saying, well, I'm still going to wait, they're going to leave. And do you know why I love that they're saying this thing now, that 2026 they balance the budget? You know why I love that this is a manipulation that he's using right now? How long can he use this gimmick? What's going to happen next year when he has to balance the budget? What gimmicks can he use next year?
It's going to get more difficult.
He doesn't have 5 from Eric Adams. That's the big one.
So I love this. Because go a year from now when he has to do this. What month and year are we in? A year from now. It's May of 27. What starts in May of 27? People announcing that they're running for president 2028. Okay? That's the date, just so you know that. It happens between March, April to June. And I think the president announced he's running for president June 13, June 14, right around his birthday, the first time he announced he's running. So next year, when everybody's announcing that they're running, he has to give his budget next year this month. And AOC is probably running, and the people that they're going to compare AOC to is who? To him. And they're going to say similar policies, Is that how you want someone to run America? So this hurts the socialist candidates in 2027 when they announce they're running. Bradley.
You know, I don't really have a strong opinion
on this one.
Because again, when you're spending $42,000 per child and the results are terrible, it just screams to me that there's some sort of corruption going on. I don't trust politicians. I don't trust this guy. So I think it'd be best if I reserve my opinion. $42,000 for a kid, they should be coming out of school with a SaaS company. Like, where's that money going? You think it's education? No. Let's check out the vendors. Let's go look at. Let's start.
I dare you to let me build you a completely free e-commerce store, preloaded.
Yeah. And by the way, you know what the budget is for New York City? Rob, can you type in New York City's budget, annual budget? You know what the number is?
City?
It's 120 some billion dollars. Yeah. Look at that. $124.7 billion is the budget that they have. $124.7 billion. They're doing everything in New York City with that number. Okay. So it's pretty wild. But again, for simple, this answers a few different questions. People who leave New York City will be coming to places like this.
Yeah.
And they'll be going to places like Tennessee. And whatever's going to happen, like right now, one guy just bought a house in our community. You know where he's moving here from? Canada. Okay. Very successful business guy, one of our clients. We helped him out. Everybody was involved in helping get this property. And if you walk around the community, you're seeing people from Canada, New York, DC, Chicago, all over the place that they're moving down here. And it's not slowing down anytime soon. All right, let's get to the next story. Next story I'm going to get.
Okay. So what are we seeing here? There's a new trend that's happening where it seems like the housing market is full of people who are kind of sitting on the sidelines and not exactly buying, but the inventory has gone up. So there's more sellers than there are buyers. Why? It's true. There's more people in the country. The housing developers are building more and more property. So there is more property, more inventory of property out there. But there are factors that's contributing to why we're seeing this trend. One of which is what politics is happening in certain cities. So the big metropolitan cities like New York City, which has somewhere close to probably about 21 million people, is now experiencing this influx of taxes on the rich, essentially. So taxes on the rich means that they're going to somehow tax people more through their property tax and everything in order to generate more income for the city so that they can squander that money on what we're calling education spending, all of which we're seeing is not actually yielding any results, right? They're spending the most per pupil in the schools, and their results are abysmal. They're bad. And so now there's a proposal that they're going to split the cost of educating a student, which is more than $40,000, give half to the parent and then take the other half and then put it into some sort of investment instrument that will grow over time. And by the time your kid is out of school, they have $300,000 on reserve waiting for them. That sounds like a good idea, but the man raised a good point. Can you trust what politicians are saying? Can you believe them? And the problem is this problem was created by the same politicians who's somewhat proposing a new resolution to it. If they weren't effective in the first resolution, why would we think or have any confidence that they would be in the second? So that's sort of what's in question. But the point being made here is that there will be an influx of buyers moving into certain markets. So if you're on the sideline as a potential buyer who's been kind of waiting it out and letting the market do its thing, don't allow the trend to mislead you, is what he's saying. Because, California's taxing people out the wazoo. A lot of companies are leaving, going to Texas, going to other locations. Some of them are going from California all the way out. Look at Jeff Bezos. He left California and he moved all the way out. Okay. He moved out to Florida. Florida just got rid of their property taxes, or they're on the verge of doing that. So, those places where there are inventory of housing available, it's probably best that if you have the opportunity to secure something while there's more inventory than there are buyers, naturally it means that the prices will drop. And if the prices drop into something that's reasonable for you to afford it, we just got a new Fed chair who may potentially lower the interest rates. So I think you're going to have an increase in buying soon on the horizon. But what you're going to see is that it probably would make sense to buy maybe around this time when the inventory is high and the buyers are low. Because what he's saying is, with these implementations of these taxes from these liberal controlled states where they're overtaxing their rich, that now means those people with the means who don't want to be taxed are going to leave those states and gravitate to states into markets that has an influx of and that offers them something that the state they're leaving doesn't, which is probably low taxes, more reasonable policies, and things of that nature. So it's two things. It's an opportunity because, you know, it's a lower cost to come in and to purchase the property because the inventory is more than the buyers. So there's an opportunity there, but it's also something to be mindful of that you can, depending on what markets you're operating in, you know, kind of continue to allow prices to dip so the market could correct itself. Because I think some would say that prices are overinflated, right, for houses. I'm seeing houses that used to be $300,000, twice that amount, right? And of course, when interest rates are high, you know, there's not a whole lot of people that's changing things. And when the demand is low, they can justify keeping the price that high. But as these shifts takes place, naturally the market will course correct, and you'll start to see differences in terms of how things are priced out. So it's a good opportunity for a buyer. And what he's saying is, be smart, be strategic. Don't wait till the trend starts to go upwards to decide that you want to buy. Around this time is a good time to find a good market to buy in, so that when that trend does come up, the value of your house will then go up in addition. So to me, this is good advice. So buyers beware, pay attention, you know, find those markets that investors may find favorable, and maybe start to look if you can make some investments that could yield a result or a return for you in the future. All right. That's it for me on this particular segment. I thank you guys for joining us on this particular segment. I hope you found something useful out of this information, and also that you can apply it in your life. Obviously, the show and this channel is meant to be constructive and to give you useful information that you can use to better your life, whether it be in relationship or whether it be in the finances, with your finances, whether it be in politics, your personal life, your spiritual life. We're looking to add value. So if you're not connected, I ask you earnestly to join our community, stay connected, so you can be notified of the, you know, latest and greatest episodes we have discussing a multitude of topics. And also we ask that you lend your voice to the conversation, weigh in, comment, share the video, and stay connected. Change starts with us, and, you know, being of one mind makes sense for us to curate that change. So thank you guys for your time. And until the next time we speak, God bless you all.